Very good morning, everybody.
Good morning.
Thank you for a full house. Overwhelmed with the response. So many people I see here. Coming to Kolkata for the first time. It's a beautiful city. Yesterday I was in the Florries eating those nice things that you have there. And I can assure you, stock market is as tasty as that. But if we understand it properly and do it. And these days, everybody wants to be an intraday trader. Everybody is dabbling in options. A lot of people want to come here seriously. And is the volume a little? So, you can all hear me on the back side? The back side, you can see me properly? Can you see the screen properly? Fine. So, how many of you have tried intraday trading? Raise your hands if you have done some intraday trading. Thank you very much. How many of you have lost money? Raise your hands. That's all the people. Thank you for a very honest response. So, let me start with this. And it's not only here in Kolkata. I go to about 8 to 9 cities every year. Wherever I go, I ask this question, and the response is almost the same. Where most people say, we tried intraday trading, we tried options, and we lost money. This is a very common response that I get. Thank you for telling me that you had the same problem. Why does that happen? That is the first thing that needs to be understood. The reason you have not succeeded in intraday trading, many people can give many reasons. I didn't know where to enter, I didn't know where to exit, I didn't have the proper skill. All that is fine. But the primary reason why most of the intraday traders don't succeed is because they don't have their profits tied to any long-term goal. This is the first and a very basic reason. They do not have their profits or the intraday trading tied to any long-term goal. They make 10,000 rupees one day, they lose 10,000 rupees the next day. I'm a full-time professional trader. I'm a coach for more than 12 years. And in introductories like this, more than 1 lakh people have passed now. In my main trainings, more than 5,000 people have passed. And the first thing I teach when I start my 6 months mentoring program is that whenever you make money, let's say you have made 5,000 rupees by buying an option or a future, within 15 minutes, that money should be transferred into something that will be with you for 20 years and you won't look at it. It will be into your long-term portfolio. In fact, your long-term portfolios will not be built with your, salaries and savings. No, that is for your family. Your long-term portfolios, your long-term wealth should be created only with your short-term trading. And when you do that, and short-term trading becomes a very serious thing for you. Because if you do not have consistent profits in your short-term trading, you will have no long-term portfolio. Do I make sense, guys? And then your intraday trading becomes a very serious thing. You all go to jobs. You all work hard there. You're there in the morning, you work till evening, because you get a salary, and everything in your life, every expense is dependent on that salary. If there is no salary, there is no life. If you want to come to the stock market, you have to take it with that seriousness. In this very class, I have a few people sitting. Some of them are tip providers. Some of them are shortcut trainers, I call them. Some will be selling you a software. The moment you're out on the break, they will catch you. In every workshop, they come off mic, everywhere. Because that's a very easy way to get people who are interested into the stock market. And they will promise that they will make you rich in 2 days. They'll promise they will handle your money and they will make you rich. They have a software which consistently gives money. They have a strategy in which you never lose money. These are dreams, guys. These are dreams. It's very good to dream, but till the time we do not convert that dream into a reality, It is just a, how much time does it take to become an engineer or a doctor? 20, 22 years. You go to a school, you go to a college, you go to, a specialization, and that's how you get your jobs. So how much do you prepare yourself for? You prepare yourself for 9,800 hours roughly. That is the 10,000 hour rule, the whole book on it. If you want to master something, you have to do it and repeat it, about 10,000 hours. That's when the world will come and throw money at you, take it whatever you want. If you want to become good stock market traders, investors, you want to create good portfolios, you need to have a patience of 6 months. 6 months is what it requires to get a hang of it, to get the required skill, and after that, I can promise one thing, your next generation will not have to do a job. But that is the hard work you will have to do. So, who is Howard Buffett? You have any idea who is Howard Buffett?
Bill Gates?
No, not Bill Gates. Howard Buffett is the son of Warren Buffett. Is he into stock market? No, he is not in stock market. He is an agricultural scientist. At the age of 18, his father gave him a few $1 billion and said, do something good for humanity. And he chose he will work in the field of food production. And that's what he done. He could live his dream, he could live his passion. Why could he do it? Because his father made him financially free. I'm not only talking about making yourself financially free, we are all parents. I'm talking about how can you take it so seriously that even your next generation has a skill by which they can become financially free. So thank you very much. All seats are full. Let's start now. I'm Yogeshwar Vashishtha, and I would be conducting this session for about 2 hours. I have no tip service to sell. I have no shortcut by which you can make money in 2 days. I do not handle anybody's money, and I am a full-time trader. I do it myself, and I have thousands of people who join me every day, and they live trade with me, and we build our portfolios together. We do live trading. We believe it is a skill which can be mastered only when you take it seriously. The serious people here will always make money from the people who are not serious. Thank you very much. Thank you for coming. Let's start. Stock market is a risky place. That's the first thing I always say. It is a risky place. And why is this a risky place? This is my trading room, guys. I'm from Mumbai. This is my trading room. This is where I make my living. And this is also the place from where I, connect with more than 1,000 traders every day, and we live trade every morning from 9 to 11 for 2 hours, our options, our strategies, our methods. But the key is we understand when we are coming to the stock market, we are coming into pure 100% risk. There is nothing safe here. It is pure 100% risk that you are coming here. And when you come in the world, when I came into the world, what was our risk? Our risk was 100%. How many skills were we born with? 0. We couldn't even speak. We couldn't walk. We couldn't talk. We couldn't write. We couldn't socialize. All this were taught to us by our parents. Yeah. And gradually you acquired all the skills. How many of you are freshers who have done nothing in the stock market? Raise your hands. You guys are so lucky. Because you are at least starting as a fresh. You have a blank slate that is there. This is my trading room. I'm a book lover, guys. I love books. Read a lot. This is the back side of my trading room. Again, full of books. This is the place which I use for my exercise and my meditations. And the life of a professional trader is pretty interesting. I earn one thing in plenty, and that is the most precious thing in life, and that is time. The first thing trading and investing has given me is a lot of time. In your regular job, you will require about 200 to 240 hours per month. When you become a full-time trader, your commitment is never more than 50 hours in a whole month. That means you get to live a life. You can do things of your choice. And you can seriously think about financial freedom here. Just sit here, sir. You can come here. These are your vehicles of investment. These days, a lot of people are buying mutual funds because FD rates have gone down. Because FD rates have gone down. Earlier, the FD rate was about 9% a year, then 8%, 7%, now somewhere around 6% is the FD rate. So, they are not attractive anymore. So, a lot of people bought mutual funds about 1-2 years ago, thinking this is where I'll get more growth. And how are your mutual funds performing now? All down. There are more mutual funds than stocks these days here. And why? Because it is equity, it is subject to risk. So, let's look at your choices. The choice number 1 is stocks. High returns, liquid, it is high risk, and skill and training is required. I'll be talking about this today. This will be a short of cheers now. You will manage. If you are there. Okay. Then mutual funds. Mutual funds are designed to give you 2-3% more than the FD. That's how they have been designed to give you. And if your holding period is about 8 to 10 years. Then real estate is after demonetization. Real estate is not a great attractive place for investment. It was cash driven. Cash is being sucked out. And the rate of collapse of real estate will be, you can do a correlation with the rate in drop in FDs. When FD will drop down to 4% a year, which will happen in the next 4-5 years, your real estate will go down about 20% more down. Because it is cash driven and it was too much profits for the builders. Finally, with the RERA coming in and a lot of regulations coming in, and the way real estate will be sold in future, the way mutual funds are sold would be in a demand form, which is happening in a few countries. Now, this is the future. So as a medium of use, very good to live, to build your offices, but for investment, it is a dead thing now. It's a dead thing. Plus, it is illiquid. Gold is giving some good returns, but overall, gold has given about 4 to 5% a year returns. Those are the historic returns of gold. And cash, it is not even safe to keep a lot of cash in your house anymore. It doesn't give you any return. So like it or not, if you want to have a second source of income, if you want to create a long-term wealth, you need to, look at stock market as a very serious asset class. Not a short-term thing, but a long-term thing. It is a really, really long-term thing. I see people putting money into their FD set. No photographs, please. Thank you very much. So, people put a lot of money into their FDs, giving 6% a year. If a thing is growing at 6% a year, how much time will it take to become double the money? 72 divided by 6, there is a rule for it. It's called the rule of 72. 72 divided by 6, 12 years. It will take 12 years for your money to become double. That means now if you put in 1 lakh of rupees, after 12 years, it will become 2 lakh rupees. After 24 years, it will become 4 lakh rupees. And what is the rate of inflation in our country? About 6-7%. So what would be the actual growth of your money, sir? That's why, even though your FDs, your PPFs, they are guaranteed, they look very safe, they are not even capable of beating the inflation. If you want to beat the inflation, if you want to create wealth, stock is a place you will have to go, but not blindly, not just like that, the risky place that you are going. This is the keyword. The keyword is income. You come to the stock market to create income. What is income? Income is that money which is consistent in terms of amounts and in terms of frequency. For example, your salary is you get it every month. And in stock market also, till the time you can't create incomes here every month, it will be the most useless place you will come to. You don't come here to make losses. You come here to make profits. Remember that. In the end, you will be judged only on one thing, whether you are able to create incomes here or not, short term and long term. Whether you make it from Tata or from Bata, it doesn't matter as long as with the profits in your home, you can bring the atta. Till the time you don't have an expense connected to your stock market and you're not able to take care of that expense, stock market is not a serious thing for you. But is there a lot of money here? Yes. Is it for everybody? What I've seen with experience, the 20-80 rule applies here. 20% of the people will make money from the 80%. This is what works everywhere. This is what works into the stock market also. You are serious. You have come on a Sunday morning at 10 o'clock sharp. In Calcutta, Sunday morning I have heard people don't like to get up early. You have got up early. You got a mode of transport and you came here. You are serious. So you already said, I am serious about it. Take one leap forward, become more serious and enter the 20% by acquiring the necessary skill. Inflation is taking away the purchasing power of your money. Your 10 lakh rupees today in 25 years will have purchasing power of 2.5 lakh rupees only. That means if you put 10 lakh rupees of cash just now at your home and after 25 years it will be worth only 2.5 lakh rupees. So you not only have to beat inflation, you also have to get growth. Another challenge you will have is there is no pension. 95% of the people sitting here are in private jobs, corporates where there are no pensions. And the average age we have is about 85. So you will have to create your own pension, and the best way is to start building your portfolio today. I always promote wherever I go that your journey starts with portfolio building, and the tool for portfolio building is intraday trading. Means if you are not successful in intraday trading, you have no long-term, then your intraday becomes a very serious thing for you. Let's see if I can find a calculator. Let's look at a compound interest calculator. And let's go very, very small. Let's say you have the required skill where from your intraday trading you can make only 10,000 rupees a month. I'm not talking lakhs, I'm not talking crores, I'm talking a very simple 10,000 rupees a month. And you learn intraday trading to such a level that no matter what happens, you will get that 10,000 rupees every month. So I write here, I say, okay, I will make 10,000 rupees every month. And what do you do with that 10,000 rupees? This 10,000 rupees you immediately put into your long-term stock portfolio, no mutual funds, only portfolio, stocks. In your long-term businesses that you have identified, and you should always have a handy list of 50 stocks. That is the handy list you need to have. 50 stocks. And you should know out of those 50 stocks with this 10,000 rupees, which one is coming on a buying level today. And those 50 cannot be randomly selected. You will spend about 3 months learning fundamental analysis, how to find those 50 stocks out of the 8,000 stocks that are listed on the BSE and the NSE based on a strict set of criteria. So the moment you have the 10,000 rupees and you are expecting a net growth after inflation of about 20% a year. That is the growth is perfectly capable of giving. Stock market, in fact, it can give more. Let's be conservative. Let's be conservative here. 20% a year. What is the rule of thumb of portfolio building? The thumb rule of stock portfolio building is the returns you should expect from it by doing it scientifically should be 3 times your FD rate. That is the thumb. What is your FD rule rate? Around 7% is your FD rate. So what is your expectation? 7 into 3. What do you get paid extra for? Your risk. If you don't need any risk, you can put it in FD and get your 7%. But because you are taking the trouble of taking the risk here, acquiring the necessary skill, so you should have a reasonable expectation that I will be able to make at least 20% a year. A mutual fund gives you about 12-13% a year, but they don't give you everything, do they? They give you a little extra. That's all, rest they keep for themselves. So here you say, I will work hard, I'll learn fundamental analysis, I'll learn technical analysis, and I will learn how to make a net 20% a year from my 30 stocks, which I have chosen after learning the fundamental and technical analysis, and I know these are companies growing at a higher rate, and they will give me these returns not only from their price movements, but from the bonuses, from the dividends, and from the splits also. So, when you put that 10,000 rupees here, and let's look at how many of you are around 35 years of age. Around, can be a year here and there. So let me address this. You will retire at 60, guys. All of you who are around 30 to 40, you will retire at 60, and I say about 25 years. 35 plus 25 is 60. And let's say every month, no matter what happens, you will put in 10,000 rupees in this stock portfolio that you have learned, and you will not touch it. You will only see once in a year out of these 30 companies, does something need to be changed? What is your monitoring period? Once a year, not every hour. Once a year, not buy and hold for 20 years. No. Once a year, you will go back to your portfolio, you will see these are the fundamental criteria, these were the technical criteria based on which I bought them. Now, are they still fulfilling the criteria? Let's say out of 30, 25 are still fulfilling, 5 are not fulfilling. You will sell the 5 and bring in 5 more from your list. And the process continues year after year for 20 years. And let's see, how much will that 10,000 rupees a month become? Let's count. It will become 8.7 crores. And this is how Warren Buffett became rich. This is how Rakesh Jhunjhunwala became rich. So, how does the curve go? It is not a linear curve. It is an exponential curve. This is how it goes. This is the curve. When will you get the most money in there? And if you don't put it there, what will you do with that 10,000 rupees profit? Next day you will lose it. So all those people who said, I have lost money in intraday trading, have you understood that now? You have to make it so serious that you don't have a choice to lose money. Will losses happen? They will always happen. let's understand the base mechanism of this market. Let's pick up anything. Let's look at, let's say this is Asian Paints. This is Asian Paints. And Asian Paints is available at 1,580 rupees. And let's say you tell your broker, I want to buy tomorrow Asian Paints, I think it will go up. Your broker has no problem, he will buy it for you. And you bought, let's say, 100 Asian Paints. Now in which direction do you want Asian Paints to go, up or down? Up, right? So you are expecting Asian Paints to go up and you eagerly wait for Asian Paints to move up. Now tell me one thing, this 100 Asian Paints, somebody sold them to you? How about that guy who sold his Asian Paints to you? Does he think Asian Paint will go up or will it go down? Can both of you be right? And this is whether you do a stock trade, whether you do a options trade, whether you do a future trade, commodity trade, a USD INR, a Euro USD, the mechanism remains exactly the same. Any trade can happen, any investment can happen only when two people have a sir, if you have to yawn, you can go out. It's very, you have not slept well, please, out. No yawning, I'll throw you out. This is a serious session, there are 120 people sitting here. No yawning. Okay, so what happens on this is that, now this is the base, this is the first risk. What are we talking about? What is the definition of risk? What is the definition of risk? Risk is uncertainty. Risk. Can you go a little back? I see you sleepy, I'll get very disturbed. Can you sit on the back side, please? Yes, go there. Please put him back. So, no problem, you're sleepy, I'm okay. Be back. Okay, so, what is the base thing that we have? The base thing we have is, let's fall in love with this word. You have to be in love with it. If you are not in love with the word risk, you will never make a single rupee in the stock market. A pilot gets a salary of about 8 lakh rupees a month. A cab driver gets a salary of maybe 20,000, 25,000 rupees a month. Why is there a differential movement? They are both technically drivers. Why? The pilot is handling a higher risk. What do you get paid in your life? You get paid in your life for handling a higher risk, managing something that others can manage by a skill that you have acquired. By a skill that you have acquired. Stock market is exactly the same. And in this market, what is your qualification, what is your education, what is your designation, doesn't matter. It is the most democratic place I have found, where a person with a 20,000 rupees of capital has exactly the same chance with a person having a 20 lakh rupees of capital or a FII with 100 crore of capital. What will you make money here? You will make money here with your skill. A skilled person will make money from the unskilled person when it comes to the stock market here. So, what is risk? What is risk, sir? Yes, what is the risk to you in the stock market? What is the risk? What is the risk? Losing money? Losing money? Losing money? Okay, let me ask this question again. Let's say you bought Asian Paints here at 1482, you purchased Asian Paints, and now Asian Paints has gone up to a level of 1580. This is where you bought it, and now this is where it is. Now tell me, has your risk increased or decreased? Most people will say, my risk has decreased. The answer is opposite. Your risk has actually increased. Earlier, only your capital was at risk. Now, isn't your capital plus your profit both is at risk? If you don't take it out, you can lose it. And this is the base difference, let's understand. When you are going and buying a FD, your risk finishes the moment you buy it. When does your risk finish? The moment you buy it. Because the bank gives you a piece of paper guaranteeing you your 7% a year. You don't have to go every month check, is my FD safe or not? It will be safe. But when you are coming to the stock market, what is the cycle? It is the exact opposite cycle that we have here. What is the cycle? You buy and you sell. Here your risk starts. And here your risk finishes. It is the exact opposite of the debt market. And between your buying and selling is the uncertainty. And you need to have the required skill to handle this uncertainty. So what are the two major risks you will have here? The first major risk that you will have here would be a time risk. That's why intraday trading is the safest form of trading. Let's say the first form of trading, everybody on the back side, can you see the board here? The first is intraday trading. So what is the duration of intraday trading? 9:15 to 3:30 p.m. This is the duration, a few hours. So you take your trade somewhere in the daytime and by evening you finish. So how much is your time risk? Minimum. Your risk is 1 day risk. So here, what kind of a risk are you working on? You are working on a 1 day risk. Now, the second is a swing trade. In a swing trading, your normal duration is about a week. You buy something, within a week you sell it. A long position or a short position. So has your time risk increased or decreased? Increased. Now your time risk is a week. The third form of trading is a positional trading. In which you hold the trade for almost a month. So here your time risk has become whole month. Your time risk has increased. And when you are building a portfolio, the fourth form is a portfolio, stock portfolio. And here your holding period is in years. So which one is the most risky, intraday or portfolio? Portfolio. That's why you will have to work double hard to learn fundamental analysis. Most people work hard only to learn technical analysis. They get fascinated with candlestick patterns and dojis and those other things. But what is the purpose of technical analysis? The purpose of technical analysis is to fund your long-term portfolio. And what is a reasonable target you should be looking at? In portfolio building, you can only work with stocks. What are your vehicles? Let's look at your vehicles. Since most of the people are beginners here, so I'm taking it from the base. Are you getting a hang of it, guys? Don't come here dependent on anybody else. Stock market can only be conquered with your own effort. any kind of dependency on anybody is very dangerous. As I said, when you will go out after this session, there are at least 8 people I know who are sitting in this class who have come here to either sell you a tip service or some stock market software or some 2-day trading kind of a stuff or maybe a LIC policy. Don't fall in that trap. It takes about 6 months to become a serious part-time trader and investor, and it takes about 2 years to become a full-time trader. And I have many students who now left their jobs and they do it as a full-time profession, but it didn't happen in 2 months. Some took 2 years, some took 3 years, some took 4 years, but your investing and your intraday will start very well after 3 months. Nothing can be learned in 1 day or 2 days, that is impossible. Now, when we are coming into the arena of trading, the first form of trading is intraday trading, which is for a few hours, swing trading for a few days, positional for a month. So you need to know what vehicles to use where. I see a lot of people do intraday trading with stocks. It's like playing golf with a cricket ball. Stock is not designed for intraday trading. That is not the vehicle for it. Because what is the first product that we have? The first product that we have is a stock. And this is a full 2-hour session. I'll be finishing around 12:10. So in between, if somebody wants to go to washroom or drink water, you can just get up, go out and come back. There won't be any break in between. So one is stocks. Stocks are primarily used for portfolio and positional trade. This is not a vehicle for intraday trade. For intraday trading and swing trading. Then there are 2 more asset classes. One is stock future. Index future, stock option, index option, commodity future, commodity option, and we have Forex future and Forex option. These are the products for intraday and swing. These are the products for intraday and swing trading. And the main difference is when you are working with stocks, stock is unidirectional. That means stock can give you money only when the price is going up. It is not capable of giving you money when the price is going up. For that, you have to switch to derivatives. All these are derivatives. All these products that I have listed here, they are called derivatives. And derivatives are 2-directional. Derivatives are 2-directional, means they can give you money in both the directions. Up direction also and down direction also. Let's see this with an example. Let's take the latest fall down, Yes Bank. Yes Bank, if you look at just last few days, let's look at this move of Yes Bank. Yes Bank in the last, those trades for those things, about 5 days has fallen from 80 rupees to about 59 rupees. if you are holding the stock of Yes Bank, would you have made money or lost money? You would have lost a lot of money. Let's now look at something else. I go here and instead of equities, which is called stock, I go to derivatives. Look at Yes Bank. And let me look at a put option of 70 rupees. A derivative. And let's see what happened to that put option in the same 5 days. So, if you see, about 5 days ago, the put option was available for 2 rupees. And now, it is available at 11 rupees 80 paisa. So, what was this option giving you every day? 100%. So, while your stock was losing money, your option was giving you almost 100% a day. And that's where a lot of people jump in. All those people who raised the hands when I said intraday trading, this is the chart they see. It is not a secret chart. Any broker will have this chart. It is this chart that they see. So I want to make this kind of a money. Can you make this kind of a money? Impossible. Because this is a hindsight I am showing you. This has happened. When do you have to take a decision? And this is where the skill part comes in. Let's say, this is where you will have to take the decision. Price is moving up. How do you know from here whether it will go up or whether it will go down? When do you have to commit your money? Here. Not after you don't have to commit your money after the move is finished. You have to commit your money before the move starts. And you are not in a certain zone. You are in a pure uncertain zone. You are in a pure uncertain zone where with your skill, you have to find out which side is the probability. There is no certainty in the stock market ever. You only work on probability. Your favorite chapter from your maths book would be statistics and probabilities. Because when we are coming to the stock market, we are only working on probabilities, and you would have all learned the bell curve. This is the bell curve. And you have to find out in a particular situation which strategy, which method is giving you the highest probability. And you take the trade in that direction and protect yourself in another direction. There are two ways intraday trading can be done. One is a suicide way. This buying call, puts, just like that is a suicide, where you go and you commit suicide. Because you will be fighting against it. Other is called protected trades. I'm not interested in catching 100% move a day. That's not possible. Yeah. But I can definitely catch 1% move per day. So I'm not interested in the 100. I'm interested in 1% per day. And if you are able to catch, a 2% move on one day, and lose 1% the next day. Make a 2% one day and lose 1% the next day. By the end of the month in 20 sessions, won't you make 10% a month? This is easy to achieve. So, these are the benchmarks. What is the benchmark? When you are building your portfolio, this should be very clear that this is what you will be aspiring for. Before you take your education, you know exactly what degree you will get. What are you getting into? So before you commit your 6 months, 1 year, a certain portion of your life, you should know what are you working for and is it achievable? If somebody says, I get people who say, I want to double my money every month. I said, dream. In your dream you will get it. In reality that is not. I said, what is the, promotion you get every year in your job? I don't get it at all. So I said, why do you want the stock market to give you everything? Ask reasonable. When you ask reasonable, it will give you reasonable. So reasonable expectation. Let's talk about expectations. In 2 hours, I cannot teach you stock market, friends. In 2 hours, I can just introduce you. After that, you can come and learn it seriously with me. Thousands of people have learned, but my main aim is to introduce it to you properly. I'm doing these sessions for more than 12 years now. More than 1 lakh people have attended. And if I'm able to tell you this is the risk and this is how to mitigate it, I think you are on a good journey. What are the expectations? Let's look at your expectations in the stock market. When you are building a portfolio, you are targeting 2% per month. You're targeting 2% per month. So 2% per month will give you about 24% a year. I assume 4% will be eaten away by inflation. Our inflation rates are going down. So you will still get a decent 20% a year. And where will you get the money for your portfolio? From your intraday and swing trade with derivatives. Portfolio of stocks, no mutual funds. Intraday and swing. Here we are targeting 10% per month. So you are working on a higher risk product, you are having a higher leverage, earning money from it and immediately shifting it to something that you will not be looking for 20 years. And that is the key. I remember my father is a scientist in the Indian Institute of Petroleum. These days we have this organic fuels into the aeroplanes from Indian Institute of Petroleum. My father was part of that project. Now he's retired, 84, enjoying his pension. And when he was about in 1980-85, he bought a piece of land. It was about 10 acres that the person wanted to sell him. He said, no, I don't need so much. Give me only 4 acres. So he said, no, take all now. It will be good for you. No, I don't know why I'm taking 4. Just give me this. So at that time, in that remote place in Dehradun, he bought 4 acres of land for 18,000 rupees. And my father was very sure he had put money just like that somewhere. Somebody had sold him something. Today, the value of that land is 18 crore rupees. And I was doing the compounding, so the land has grown at 23% per year. The land has grown at 23% per year, and it has become so much. Put it on the calculator, you will get the number. You will make most of your money when it is invisible to you. You will make most of your money when it is invisible to you, and that's why concentrate and focus on creating short-term profits which are visible. And the moment you make it, calculate. I've made 15,000 rupees today using these futures and options. Out of this 15,000, this 500 rupees will go in government tax, broking and all other things. I want to transfer 12,000 rupees immediately in 15 minutes to this XYZ stock, and every stock you buy should be only from that. And after 5 years, just after 5 years, you will start seeing the magics. This is the only way your intraday trading will succeed. Otherwise, try how much you want, it won't be success. Because it is so short term that you will never have seriousness into it until unless you tie it to a long term. Now, there are two. Is this clear so far? Now let's go further. This is a risky place. When you buy a car, when I buy a car at least, the first thing I check is not the accelerator. I check the brakes first. Are the brakes working properly or not? Because in an emergency that will save me. So when I'm coming to the bank, putting money in FD, I don't care. My sign is stopped, I'll get my money. But when I put in my 10 lakh rupees here, I know I'm going into risk, so I have to do my risk management. There are 4 things that are important in your journey of stock market, short term or long term. The first one is fundamental elements. Let's talk about the 4 things that are important. Are the expectations clear? 10% a month, your intraday trading with skill will give without a problem. But 100% a month, that is not possible. So don't even ask for it. It's a lottery. Sometimes you might get it. Yes Bank doesn't fall every day. Now, when we are going here, we saw these are the expectations we have. What is the next topic we are talking about? Sorry? Risk. This is the key. The 4 things to learn. The first thing you have to learn here is fundamental analysis. Let me ask you a simple question. If I ask you, for your long-term portfolio, would you like to buy Tata Motors or would you like to buy, say, Chaman Lal Shethia? Which one will most of the people prefer? No doubt. Absolutely zero doubt in the minds of the people that Tata Motor is the real choice. Do you know that in last quarter, Tata Motor made a loss of 2,300 crores. All its units are losing money. It has thrown away a lot of its employees, and there is a high chance that Tata Motor might close down. Now, with this, has your view changed a little? Yes. Because the first answer you gave me was an emotional answer. It's a brand. It's Tata. Has Tata ever come to your house and given you 100 rupees? This is what most people come into the stock market is their perceptions. You're not trading skill. You're not investing skill. In most cases, you are trading and investing your perceptions. Here, you have to put all your perceptions in a dustbin. Everything, each and every one you have, put it in a dustbin and start fresh with a whole new skill set. What is the bottom line? You have to make money. Let's open up. Let me open first the Tatas. This is Tata Steel, guys, or Tata Motors. Tata Motors. And this is Tata Motors now, guys. Tata Motors in the last 1, 2, 3, 4, 5 years has come down from 630 to 111. You would have lost 80% of your wealth, and you would have lost almost 5 years of your life. Where is the time risk highest? In portfolio building. Most people think portfolio is the safest. I say portfolio is the most risky, because there your time commitment is the highest. If you are wrong in intraday trading in the first 2 hours, you can recover the money in the next 2 hours. But if you are wrong in 7 years, you don't have 7 more years. That's why your long-term portfolio building has to be taken with double the seriousness than your short-term trading. Yeah. Now let's go to Chaman Lal Shethia. Some people are wondering if there's a company like that. They are rice exporters and you get very good money in that. This is Chaman Lal Shethia. Now let's see. This is the key. Chaman Lal Shethia went from 2 rupees to 200 rupees. Now from 200 rupees it has come down to 40. If somebody was buying and holding Chaman Lal Shethia, he would have only got from 2 to 44. Not only that, most people, where do they buy? They buy on. They don't buy here, they buy on. When was the whole India buying? The whole of India was buying when the market was at 12,000. On my YouTube channel, anybody has seen my YouTube channel? So, on my YouTube channel, I have a live trading video of a election result day. That day I was trading with 8 lakh rupees of capital with my traders, and I made about 66,000 rupees of profit by evening, by which we immediately put it aside for our long-term portfolio, and I'll open that. This is the key. Now if we go here, this is my company, guys, Pathfinders Trainings.com. I'm the owner of this company. It's there since 2007. If you go here into market and lessons, there are almost 180 videos here. This is a live election result day trade.
Very good morning, points plus.
I'll come to this. Let's understand first. The first is portfolio building using fundamental analysis. What does fundamental analysis tell you? Whenever you are, let's say you are buying Axis Bank, are you buying a stock or are you buying a business?
Business.
So basically buying whether you are buying a Adani Port or Asian Paint or Axis Bank or a Grasim or a Hindalco, you're basically buying a business. And every business is growing at a differential rate. Each of them are not growing at the same rate. Some are expensive business, some are cheap business. For example, if I give two names to you here, I put here MRF, and I also put here Suzlon. Also put here Unitech. So I have three, stocks here. Three businesses: MRF, which is in tires; Suzlon in alternate energy; Unitech in construction. Now, MRF is available for 57,000 rupees, Suzlon is available for 4 rupees, Unitech is available for 85 paisa. A person who has no knowledge of stock market, what will his broker say? Why Unitech? बहुत अच्छा शेयर, 400 रुपए पे था, अभी 85 पैसे पे बिल पड़, ले ले. People fall into this trap. Then, other one, hardly anybody will buy MRF for 57,859. If I am given a choice, out of these three, I will buy the MRF. Because it is a fundamentally sound company. Let me give a few reasons. Unitech I will not buy because the business is closed. It was into the businesses it was doing, its debt is so high, it can never recover. Somebody asked me, so where will Unitech go? I said, zero. Any stock can go till. Then Suzlon, let's look at Suzlon. Suzlon has a book value of 14 rupees now, minus 14 rupees. So if you buy Suzlon at 4 rupees and 15 paisa today, and by any chance if Suzlon closes down, since you are partner in that company, you will be legally bound to give back 14 rupees to them. Would you like to buy Suzlon now? And this MRF on the fundamental criteria, in my class I teach 11 to 15 fundamental criteria, qualitative and quantitative, by which you can filter any business in the world. I'm not talking about India, I'm talking anywhere in the world. You can find out these are the businesses worth holding for 20 years, these ones are not worth holding for even 2 days. So you never buy brands. Brands are for clothes and wearing and eating. In stock market, you are a shrewd businessman who is finding out a business which is available at a much lesser value than the worth of the business. If the worth of the business is 2 lakh rupees, even if it is available for 57,000, I'll buy it. But a Suslon even at 4 rupees is a very expensive business for me. So I combine methods of Warren Buffett, Benjamin Graham, and the growth investors like Peter Lynch and Rakesh Jhunjhunwala, and we find those companies which are durable, which has great value, and which also have the necessary momentum that you can keep on holding them for 20 years. Of course, after 1 year, we will go and check whether they are still good and if they need to be replaced with something else. Where will this money come from? It will come from your intraday trading. So, when I'm opening here, so fundamental analysis, what will it tell you? What to buy. What is it telling you? It is telling you what to buy. What stock to buy. There are 8,000 businesses listed on BSE and NSE. Out of that, you have to find your 50. And not blue chips. It has to be a combination of micro caps, small caps, mid cap, large cap, blue chips, sectorial stocks, and technology stocks. It has to be a nice combination. It is the perfect combination that you'll have to learn to put on and build your own portfolio. And your portfolio is dependent on your risk profile. That's why my friend's portfolio will be very different from this friend of mine, because they have different goals and different profiles that we will be looking at. So, fundamental analysis helps you in your portfolio building long term. Then, the second aspect is technical analysis. What is technical analysis? Chart trading. There are different kinds of charts. Example, if I pick up, say Dr. Reddy, this is Dr. Reddy here. This is a candlestick, this is a line chart, this is a bar chart, the candlestick chart, a Heincke chart, a rainbow chart. And even if I look at combinations between the two and do a factorial of these 4 kind of charts, it will be 4 3s are 12, 2s are 24, just the combinations of them are 24 times. And what is a chart? A chart is basically a pictorial representation of the map. This is also maths only. Stock market is basically mathematics. It's all maths. There we are looking in fundamental analysis, we are looking at maths on a balance sheet. Here we are looking at maths on a chart. What is a candle? A candle is basically a representation of 4 prices, open, high, low and close. And the moment, most people see it as a shape. If you will see it as a shape, you will fail. You have to learn how to see the maths in the shape. Because it is basically a mathematical, is a pictorial representation of the maths. On the x-axis is the time, on the y-axis is the price. And let's take with an example here of this one. Now, let's come to this one and look at it from a technical point of view. And let me recreate the logic of time. So then we will come back to this. I go to the index. This is the daily chart of the market. And let's go back somewhere around this level. Let's go here. So what is this? This is 11,194. This is Nifty, our index. What does it consist of? 50 stocks. 50 top companies of India consisting of various sectors. And their combined market capitalization index is 11,194. The results are about to come. The votes have been cast. And This is the high of the market. This is the high of the market. And this is having a P of 20. What is the P? It's the valuation of the market. And this P of 29 at that time was the highest ever valuation given to the Nifty in the last 25 years. When the crash happened in 2008, in February, just before the crash, the valuation of Nifty in terms of P was 28. This is the maths. So here we saw, and this market was being artificially held up by 4 stocks or 5 stocks. Infosys, Reliance, HDFC Bank, TCS, which have almost 50% weightage. And the government didn't want the market to fall. It would look bad for elections. So the Nifty was kept where it was, and I had a very simple logic. If the same government came back into power again, and if they had full majority, they will have no reason to artificially hold it anymore, and the market will go to its normal valuation, which is a P of about 20. Our normal valuation is a P of about 20. Let's do the basic maths. Now the basic math says, here is a P of 29, and a healthy P for our market has always been about 20. So if I am at that time at top, the price is 11,855. So the market should be coming and touching this price now for a healthy correction to happen into the market so that the new investors can enter again. So that value, very simple mathematics, is 20 divided by 29 into 11,855. My calculator is faulty. Can somebody can give me a quick calculation, please? First, if calculator ka calculation karaoge. It can't be 500. Okay, so it is?
Divide by 3 into 2 roughly. It will be around close to 8,000.
Yeah, just give me exact figures. It's okay. Or you have all mobiles. 20 by 29 divided is 2 by 3 basically. So this will be about
8175.
8175. So this is the correct valuation. So what does technical tell you? So what was at this price, what is the mismatch? There is a technical fundamental mismatch. So what can you trade? You can trade a technical fundamental mismatch on this one. So here, let's go a little further. Let's understand, let me keep it very simple. Now this was, now we are looking at pure technical analysis. Now this one is a gap that was created on the exit polls. What did the exit poll says? BJP is coming in power. An exit polls gave you, and the market went right to the previous high. This was the next day, and this was a candle just before the election result day. This was a candle just before the election result day, and the candle was a doji. It is said if you understand properly the doji, market will come to you and say loji. That's how powerful is a. And the next day I had to live trade. I trade all bid days, RBI policies, every election result I trade with more than 1,000 traders who join me every day. And I knew this is going to be a very volatile day, and we cannot enter into it without a proper strategy. So I had to create a logic. Most people, when they do intraday trading, they don't think of the logic part. It is the logic that is the key. When you do your programming of a software, you don't start writing the code first. First you make your logic, your flow chart, and then you will start your coding. Here also you build your logic. So we had a pre-election result day session of an hour, a night before, with all my traders, and we said, let's build the logic. And my logic was very simple. And I said, and we were discussing that, I said, with this candle, which is an indecisive candle, there are three possibilities. Number one, BJP wins a majority. If BJP wins a majority, this is already factored in the chart. This will not take the market up, this will take the market down. If Congress and allies win, or a hung parliament is there, it will be a change of policies which nobody will like, definitely not the market, so market will go down. So no matter what happens tomorrow, the market will go down, and we have to concentrate only on short trades. So we decided this is the tool we will be using tomorrow. 9 o'clock we'll all come, we'll wait for the results to consolidate, and once results are consolidated, we'll wait for the downtrend to start. And we will not take a single trade till the downtrend starts, and if downtrend doesn't start, we will not take any trade. Kindly remember, nobody has ever lost any money by not taking a trade. Right? Nobody has ever lost any money by not taking a trade. So here, and where did the market finish? This was the market on the election result day. Now let's come back to that video. It is a 6-hour video, but on YouTube it is a clipped 18 minutes I have. For my students who join the course after the introductories, the first thing I send them is that 6 hour of a video. Now, let's go to this version here, which is the 18-minute clip version. Now here we are patiently waiting for the market to
strategy today. No,
and I'm not only responsible for my own trades, I have more than 1,000 people trading with me. I'm responsible for them also. And no dummy trades, we do real trades. In my trading room, I have beginners who start fresh with 5,000 rupees of capital, but I also have seasoned traders who work with trading capitals more than 50 lakh rupees, who are full-timers and do only this. So, we started building our logic here, and we were waiting. So by about 11 o'clock, I was already making 12,000 rupees with a controlled trade that I had taken. Then I was waiting, and this is the key to intraday trading, patiently waiting for your trade to develop. That's when we got an opportunity. The market, after the initial euphoria was finished, the downtrend started, and these were the first three candles that came. First, the long range candle here, and we started, and here now we aggressively started trading.
We are trading today.
And we were very clear, we entered here that we will get out here. So our exits were absolutely clear to us. This is where I will enter, this is where I will exit. When you are into the arena of trading, your entries and exits have to be predefined. You can watch it on YouTube, it is available there. And here. So by the end of the day, I had made about 66,000 rupees of profit, success rate 100%. Why? Because our logic was clear. We had a strategy in mind. We knew exactly what we were going to do on this volatile day. And not only I made money,
4,000, 19,000, 60,000, 8,000, 7,000,
these are the students making money.
12,000, 1 lakh, 15,000, 26,000, 8,500, 4,500, 5,000, 1,500. Okay, so these are,
Okay, so these are the students' profits on the same day along with me. Now, let's understand the logic here. Let's build a logic on this one. Now, we are not talking balance sheets, we are talking the technical chart. What technical chart is telling me that there is a mismatch between the fundamental and technical. And from here, the only way till the next October, November, coming October, November is, so what is the only trade to be taken? Short. And if you don't know derivatives, there is no short. So here, now, this was the market. This was the first giveaway. Normally you will see this pattern at the end of the move. We had evening star, the first candlestick pattern at each candlestick in detail. And these three candles were the giveaway. They were the giveaway that the big ones had exited. They are out. And only the retail is sitting on the market now. And after that, you see there is a pattern here. So what did the market do? This was fill the gap, broke this level, and now it has already come down towards this level now. Broken this level also, and this is a retracement level where you will see it by the bar. When is the time for portfolio building coming? It has come. Because Nifty is not reflecting the true picture of the market. Because since it is manipulated by 5 stocks, to understand the true picture of the market, I will have to go to technical filtering. Now let's demonstrate a little on the technical filtering part. Now this is the daily chart of the market. Let me put into this a yearly trend line. How do we interpret it? If the price is above the yearly trend line, the price is called bullish. If the price is below the yearly trend line, it is considered bearish. We said our market has already become bullish. But this is not reflecting the true picture. Let's look at the true picture. So I go here and I do a scanning. And with all the stocks that are available, and I say, is the market bearish or bullish? What did I say? I said, okay, show me where the last traded price is greater than the yearly trend line. And I save and scan. How many stocks are above the yearly trend line? Only 206 stocks are below the yearly trend line, 206. So 206 are bullish. Now let me do the opposite. I say here, show me the stocks that are less than the yearly trend line. So save and scan. How many are there? 1, 1408. 1408. And these are peers. Out of the total stock share, about 1600 and plus something, only about 15% are bullish, 85% are bearish. So what kind of a market are we in now? Did we see it emotionally or mathematically? We saw everything is mathematics. Stock market may start to end, fundamental, technical, risk management, everything is maths. It's not a difficult math, it's easy maths. So, the time to build stock portfolio had come 1 month ago. You don't have to wait. That one, Nifty is only talking about the 50 blue chip companies of India, but in the mid cap space, in the small cap space, there are very good stocks that have corrected almost 60-70% down now. And you should be buying them tomorrow. That's how attractive the market. We are in a very deep bear market right now, and this bear market is going on for the last 8 months. In the end, the Nifty says only, it has already started. And once you learn fundamental analysis, your portfolio building has to start immediately. Has to start immediately when you go into this. Some fresh lime for me, thank you. Nimbu pani. So here, now what we were seeing, okay, we wanted to know whether we are in a bull market or a bear market. We saw it mathematically. This is how it is working. How should a trader operate? Fundamentally, technically, or with risk management? The answer is only with risk management. When you enter the market, you have to enter, the best way is to enter it with the risk perspective. There are some places where you will be able to predict it, but there are also some places where you will not be able to predict it. But in both the cases, you should come out a winner. You cannot be a winner after you enter the trade. Please remember, you can only be a winner before you enter into a trade. If your setup is not a winner before you take the trade or buy the stock for the portfolio, it can never be a winner after you enter it. I've seen so many people who start analyzing after they have taken the trade. After you have taken the trade, you have jumped in the well, then you can't do anything. Whatever you have to do before you initiate the trade. So you need to have the right perspective in place. For example, let's take Glenmark, for example, or let's take Yes Bank. Let's say this is Yes Bank. And Yes Bank is now at about 59.25, 60 rupees. Let's go a little. Our blog on which I regularly write. Let's go back 2 months. I was writing about Yes Bank. A lot of people who ask me, shall I buy Yes Bank? And that's June 30, I had a post here where I say we are in a bear market. And now it has started reflecting in the Nifty also. Is Yes Bank a good buy? And I say the monthly double bottom for this stock is around 60. At that time it was at 110. And this would be a good price to buy, a 60 to 75. So let's now go to that stock. And I'm going into a monthly chart of Yes Bank. And let's have a look at Yes Bank. Now, let's say Yes Bank has fallen good enough. It has a book value of 105. Means it is right now available at half the book value. It's very attractive. So was Kingfisher. So was Unitech. So was Suswan. So there can never be a certainty. The only thing that is available here is a high probability. So I look at Yes Bank and I say around this level I won't mind buying Yes Bank, but there is a risk that it might go down also. There is a risk that it might go down also. So I go here and I go back and say, okay, last time when Yes Bank came down, this was the level it was not able to break, about 37 rupees. Just now, this is the mantra of the market. This is the risk management mantra that I'm going to talk now. So, I want to enter at 60, but if I'm wrong, I don't want to be wrong more than around this level of about 38 rupees. I will not take a risk more than 21 rupees. What are the 4 results that can come? You can have a big profit, a small profit, small loss, or a big loss. Which is the most dangerous one? The big loss. And your only job as a trader and an investor is to avoid a big loss forever. Like in that Chaman Lal Shethiya also, you had to learn how to buy it fundamentally, but how to sell it technically on top. So that you can buy it at 2 rupees and sell it at 200 rupees and enter something else. So here, I say I'll buy this here. And I look at this move and I draw a fib level on it. And I see that this one, based on the Fibonacci retracement which is given, it can retrace to a level of about 142 rupees in the coming months if our trend establishes. So I go up here and I say I will get out at 142. So I've decided here where will I enter, where will I get out if it goes against me, because any trade you take can only do 2 things. It can either go in your favor or it can go against you. This is basics. So, you have to be planned for 4, both of them. Most people are only thinking about profits. They don't think about losses. In fact, a good professional trader first thinks about the losses. So I say, what is the maximum risk I'm willing to take? I said the maximum 21 rupees is the risk I'm willing to take. And what is the potential profit I want to take? 82 rupees. Is it random or mathematical? Pure maths. I have a level, there is a reason for it, and all this are high probability trades, means the setup that I have chosen, its hit rate is almost, 70% in the past. Whenever I have chosen this setup, it has given me a 70% hit rate in the past. So you not only have to evaluate the current situation, you also have to have a back testing method in place to find out the setup I am getting into, what is the hit rate of this setup. So this one is a hit rate of almost, I have a double bottom at there, I use a Fibonacci, I have used my levels here, I have a divergence on the MACD already into this, and now this is, so I am risking. Now let's look at the trade, the bottom line of the trade. The bottom line of the trade is I'm risking 21 rupees for a reward of 82 rupees. And I assume my success rate would be only 50%. Achieving a 90% in the stock market is very, very difficult. It's not worth the effort. But achieving a 60% is easy. So you have to focus how you can achieve a 60% success rate and still make consistent money in the market. Please understand, you do jobs. You will not be able to devote all the time. You have limited time that you will be able to put in here. So you need to have systems and methods in place by which you can make money even by being right only 60%, 50% of the time. And that's what I focus on, because this is what you and me can do. So, I take this one here, and now let's look at the maths in place. It's all maths. I'm an IITian. One thing I know whole life is just maths. So, I take this here, and now, assuming I had a 50% success rate, I take 10 trades like this, 5 of them give me 82 rupees of profit, and remaining 5 give me 21 rupees of loss. 8 5s of 40. So in my winning trades, I made 400 rupees, and in my losing trades, I lost 100 rupees. So what is my profit to loss ratio? 4:1. The key is this one. The key is not success rate. Percentage time profit is irrelevant in the stock market. There was a famous experiment that happened in the 70s and 80s in US called turtle trading. Amazing experiment done by Dennis. And his traders, with a proper mathematical system, could make money only with a 33% success rate using trend following methods. I am a big fan of Dennis, and I use his methods in my classes. So, and the success rate you plan to achieve is about 60%. Markets have changed. We are in different era now. So about a 60% success rate is good enough. So what is the logic of this? The logic is very simple. As long as your profits are bigger and your losses are smaller, you will do very well in your trading and investing. And the moment you have big losses in the system, nothing can save. One big loss can take away all your. Isn't that what happened in your losing trades? Yes. There was one day, when everything went wrong and it took everything away. Let's see how this system works. I run an online trading room for more than 6 years now, which is online and anybody can join me from anywhere. More than 1,000 traders every morning join me for a 2 hour of trading. Not for the full day, only for 2 hours of controlled trading. And on Friday we build our portfolios together. And we use these methods there. There are all kind of people are there. Some have just passed through the classes, they're beginners, they're just watching me. Somebody is sitting with 10,000, 5,000, somebody is on a lakh rupees, somebody is very seasoned with 50 lakh rupees. And you increase your capital when your skill increases, not when your capacity increases. When your skill increases. And I sit with a standard 10 lakh. And with that 10 lakh rupees, I do trading and I build portfolio out of the profit that I made with that 10 lakh rupees to give confidence the money can be made. I believe in live trading. I'm live trading for years and years, short-term tradings and long-term trading. A lot of my videos are available on YouTube also. So let's find that. Okay. All the sessions are video recorded, recordings are sent. Okay. Let's say yesterday, and in these classes I mostly take controlled trades using futures and options. In this morning session, Monday to Thursday, I only trade futures and options. I don't trade any stocks. On Friday, I build portfolios and I don't do anything with futures and options that day. That day is only stocks. Whatever profits we make for the Monday to Thursday sessions, on Friday, it is time to commit them to a long-term portfolio. So here, this is a 7,208 rupees profit. What is my target? 1 lakh rupees per month. On my 10 lakh rupees, if I can make 1 lakh rupees per month, I'm doing good. And how many days are there? There are 20 trading days. 1 lakh divided by 20 is 5,000 rupees per day. If I can make a net 5,000 rupees per day on my 10 lakh rupees, I will achieve my 1 lakh rupees. On this 10 lakh rupees, if you put it in an FD, How much will a FD give you per day? 200 rupees. That's what you get in your FD. On a 10 lakh rupees, FD will give me 200 rupees per day. With my intraday trading, I plan to make 5,000 rupees in a day, which is achievable with the right methods and training and skill. So here, is every day a winning day? No. This was the day when the trades didn't go according to me. I lost 2,300 rupees. The day before that, when the market went down, almost 200 points down, Yes Bank I had taken, it didn't go according to me. I lost 16,000 rupees that day. And this is the challenge. On the day in the evening at 3:20, when you are feeling like a loser, you will have a strong tendency to take the trade to the next day because you are not having the jigra to take the loss. How many of you have done the mistake? Thank you very much. This is an honest class. And next day, with the Murphy's law, doesn't the loss become even bigger? Yes. So the first rule of intraday trading is at 3:20 in the evening, profit or loss, you get out. Next day is a fresh day. Okay. So I go out here. Then a day before that, so you see there are profit losses. But this same day, with the same rules, I also made 82,000 rupees in Reliance. The day it went up by about 10%. I had bought a controlled call of Reliance of 1140 strike price. On that call itself, in just one single day, I could make 1,59,000 rupees. So every day is just a day. When you go to your office, you don't become excited every day in the evening. No, you're regular, it's office. You're given a job, you do it, you come home by evening, you get your salary. By month end, you get your salary. That's what we do in stock market. Every day we go and do our job. What is our job? Our job is to take trades. I'm a full-time professional trader. My job is to take 5 trades every day. I have to be prepared to take 5 trades every day, commit my money and try to make profits. But I'm mentally prepared, I won't be right all the time. I will lose my money at least 40% of the time. 4 times out of 10, I will be wrong. Being wrong is okay. Losing big money is not. The problem is the opposite. People take it on the ego. Oh no, I will recover it back. No, don't do that. It's a trading. You have to be very rational. You have to think here as a very logical person is what you have to think here. And the same market, and let's look at an every day's loft. Every trader has to log it, I log it. And let's see how the month went. Let's go back. On Friday, I made 4,800 rupees. On Thursday, I lost 13,000 rupees. Before that, there was 1,000 rupees, 4,000, 3,000, 12,973. I'm not targeting a lakh rupees a day. In fact, in the whole of 6 years, on my 10 lakh rupees, I have made more than 1 lakh rupees only 6 times. That is a very low probability that you will make more than 10% in a single day. What the bell curve says is, let's come back to that bell curve, that if you have the processes in place, on your 10 lakh rupees, this is the median line, 5 to 10,000 rupees per day would be the highest, and this 1 lakh rupees per day will have the lowest probability. So this is what I should be focusing on, because there is a higher probability that I can make it every day. There is a very low probability, almost a 0 probability, that I can double my money in a day. So I only work on the maths. I work on the bigger part of the bell curve. That this is what I have to focus on if I have to create long-term wealth. And here also, the moment I have made my 10,000 rupees, I'm immediately transferring them into the long-term wealth and building my portfolio with it. So here, we go back here. So we can see I have winning days, I have losing days. Here, this is going on. It's my job. What is trading? Trading is my job. I do it for a living. Somebody is an engineer, somebody is a doctor. I'm a trader. So every day, I cannot do my job wrong. I'll be fired. Unfortunately, the biggest challenge that happens to most of the people is nobody is monitoring you. That's why the mistakes happen. In your job, your boss is monitoring you. He'll fire you if you do something wrong. In your business, the customer will fire you. But here, there is nobody to fire you. That's why you need that strong self-discipline here. To be very committed that this money that I'm earning and bringing here belong to my wife, to my children, to my old age. I cannot just blow it away. I cannot just blow it away. Losing is not an option. If for you, losing is an option, don't come here, please. Come to the stock market only if losing is not an option. You will make losses. Making losses is part of this business. You will have your bad days, you will have your good days. But as long as your good days are bigger, like here, this was another one, 39,000 of loss in a day, it will happen. For me, as long as the loss is not more than 3 to 4%, I can live with it. But I can't lose a 30% or 40%. So, how is it going? Let's see. So, if I go back down, is my success rate 95%? No, sir. I started trading in 2002. Today is 2019. I've been doing it for 17 years now. I'm a coach for 12 years now, a professional trader for more than 15 years. And my success rate is about 71%. That's my success rate. About 71% is my success rate. Even today, after 17 years, in 3 trades out of 7, I'm wrong. And I'm perfectly okay with it because my profit to loss ratio is 4:1. My profits are 4.1 times bigger than my loss. And I'm making a very decent, about 17.1% a month from the market. If you learn it properly, within 6 months, you can reach about 5% a month level. With proper risk management, proper guidance and mentoring. In about a year, you should be touching about 10% a month level. Above that, there is no higher limit. The beauty with this profession is there is no higher limit, there is no lower limit. Controlled trading, learning properly, you can do it. This month, I've achieved a 10.7%, 1,07,000. Last month was 1,01,000, 92,000, 1,95,000, 133. But I had a losing month in March, where I lost 4%, 53,000, 61,000. But I had a very good month in September 18, October 18, where I could make about 34% in a single month. But overall, this is what it comes to, about 17% a month. And what do you do with this money? You use this money to create your long-term portfolio. Link them together. You have to link them together and you will have to work hard for it. How does a skill develop? A skill develops when you repeat things. Skills develop by repetition. Understanding and repetition. Let's look at this calculator. How does skill develop? Skill is transfer of knowledge from conscious mind to subconscious mind with practice, practice and practice. When you do something 21 times, it shifts from conscious to subconscious. You repeat this 21 times into 21. You do it 441 times, you understand it, it becomes a concept for it, the skill starts developing. And when you do 21 more repetitions of it, which is 9,261 times, you become an expert and a skilled person in whatever field you have chosen. Most people become successful around the age of 30 to 35. Let's look at the maths. So if I take an age of 30, roughly 30 years into 365 days into 24 hours in a day. This is the amount of hours you are putting in before you start making decent money. At what age do you become, you get most of your education by the age of 16, 17 when you become a graduate, which is roughly about 10 to 12,000 hours. So you have to commit. And that's what I say is, this kind of money, very much possible, very much possible. It's all maths, no emotion. I have all my emotion reserved for other activities, for my children, for my friends, for others. But when I come to the stock market, after that, emotions are in the dustbin. There is no need for emotions here, there is no place for emotions here. You make money from others people's emotions. If you become emotional, you lose money. You make money from other people's emotions. If you become the 20 out of the 20 skilled people, will always make money from the remaining 80 people. We've run through a few slides, we talked about them. This is the equation of money. Income minus saving is equal to expense is the equation of financial freedom. You have to create 2% a month by portfolio building and 10% a month by intraday and swing trading with derivatives, a learnable skill. But your traditional education would not be of any use to you. When you go to swimming, you have to learn swimming, it doesn't matter what is your qualification. So when you come to the stock market, your traditional qualifications will not be of much use. You have to learn it from a whole new level. And if you can make your money grow at 24% per year and take 3 years to double, in your FD, this is Warren Buffett. Warren Buffett does average 28% a year for the last 40 years. We can't be Warren Buffett. I'm not intending to be Warren Buffett. We are regular. So I am targeting 18% a year net from my portfolio building, which will, in 1 year, I start with a lakh, in 25 years, 1 lakh will become 1 crore after taking care of inflation by retaining its value. While in FD, growing at 8% per year, the 1 lakh will only become 8 lakhs. Now it will only become 4. The FD rates have gone. These are the equations. You cannot have the big loss. Small losses, small profits will cancel each other, and what will remain into your system would be big profits. And this is, always remember the bell curve. Stock market trading is nothing but the bell curve. You have to see where is the highest probability and trade on the bell curve. So you spend 3 months to 6 months learning, find out what are your high probability curves. All of you will have different. And then focus on that. There is enough money here for everybody. Stocks, futures, these are the assets you trade. Let's talk about them. And you just don't buy and hold, you have to know when to get in and when to get out. Because there are stocks going up, but there are also stocks going down. Okay guys, let me introduce introduce myself in brief. Thank you for patiently listening to me. My name is Yogeshwar Vashishtha. I'm from Mumbai, born in Dehradun, and my education has been in Roorkee. I've done my M.Tech in IIT from there in geotechnical engineering. My specialization is rock mechanics and hydropower projects. That's what I was doing in the start of my career. I was a scientist in Indian Institute of Petroleum for a few years. And after that, I got a chance to work with Skanska, a multinational. And for many years, I was an NRI working on hydropower projects in Sri Lanka, Sweden, Norway, and my last project was in Yungan hydropower project in Peru, South America. And it was a very nice job. I was liking it. And my stock market happened because I had to settle down. The job was very good. Money was great. I remember in 2002, I was making 3 lakh rupees a month, US dollar tax-free, equivalent to now maybe about 10-12 lakh rupees a month. But I had a traveling job, means I had to travel from one hydropower projects to other, and in many places my family was not allowed because they were tough conditions to work on. Till the time our 2 boys were not there, so I was okay. But once the family started, children came in, I had to look for a one more profession where I could settle in a city. This profession that was giving me lakhs of rupees per month in the jungle was pretty useless in a city. So when I was in Sri Lanka working on the Kukleganga hydropower project, there I met my first mentor. His name was Jeffrey from Sweden, and he used to live trade commodities and forex market, US markets. We became friends, and I saw him trading. I had a lot of resistance in the start because my view of the stock market was very negative. When I was going for my IIT to my hostel, my father called me and he said, "Son, you're going to a very prestigious institution now. Stay away from bad habits." I was only 17. He said, "Stay away from bad habits like smoking, drinking, drugs, stock markets." So at the tender age of 17, I asked him, "What is this stock market?" He said, "I don't know. But some of our friends have gone and lost all their money. Must be some sort of gamble." So till the age of 38, I didn't know anything about stock market till I was 38 years of age. Now I'm 52 and I'm doing it for many years now. So till the age of 38, my view of the stock market was it is gambling. Unfortunately, today also, for most people, this is still the view. They will resist when you will go there because they think it is gambling. So when I met Jeffrey, he asked me, "What do you do, Yogeshwar?" I said, "I'm a chief geologist here in this project." I said, "What do you do?" Jeffrey said, "I'm a professional trader." So I didn't say anything. So after 2 days, he said, "You're very uncomfortable with my profession. Whenever some talks comes, you just take the topic somewhere else." I said, "Jeffrey, because you are my friend." He said, "What has my profession got to do with the friendship?" I said, "How can I say you're a gambler?" And he said, "Who told you I was a gambler?" I said, "You are a trader, you are a gambler. My father told me." He said, "Did your father ever trade it?" I said, "No." He said, "What is the base logic for it?" I said, "I have no logic." He said, "Why don't you do one thing? Why don't you learn from it?" So I sat with him for a few days. Then I said, "No, not this way. I'll never be serious. Charge me a fees. Give me 3 months and I'll put in 2 hours every day. Because I see a potential in this." Because he was making more money sitting in his shorts in his room near the sea beach and making more money from the crude oil trading. He specialized in crude oil. I knew this is a good profession. So I pay him the money. I started sitting with him 2 hours every day. I watched him live trading. He was explaining me the concept. That's how I teach also, by the way. So within a few months, 3 months, I knew this profession was for real. From there I was transferred to South America, Peru, working on Yungan hydropower project. And there I enrolled myself in Pristine Academy of USA. Very prestigious institute. I wanted to do it more structurally, properly. This was a game changer. And I had, my family was in India, and I had all the time after my job, and because of the 12-hour time difference, after my job was finished at 5 in the evening, I can do all the intraday trading in the Indian market. So I started liking it. And Jeffrey was there for guidance, there also, he's still there. So in the start when I was doing, all my stop losses were getting it. Whatever I was trading, everything was getting it. In the initial phase, you will have those challenges. So then Jeffrey said, how are you putting it? He guided me, hand-holded me. And within a year, I was touching about 10% a month on my capital. I knew this profession was for real. I was doing it now for 2-3 years. And I was transferred to Scotland from there. I came back to India, and I decided to become a full-time trader. So I have to give it a shot. So I went to my dad. I said, let me give him the good news first. I said, Dad, that project is finished. I'm being transferred to Scotland now. He said, very good. He was very proud of me traveling around. He said, but I don't want to go there. I want to come back to Mumbai and become a full-time stock market trader. Luckily, I was sitting 5 foot away from him. He was so angry. He said, my son, a gambler, you know, I had to spend 2 days, but he's a very reasonable and logical man, he's a scientist. And I showed him the mathematics. One language he loves is the way I am telling you now, I spend time. So he said, let's have a deal. He said, give it 3 years, you have enough savings. Give it to your serious 3 years. But after 3 years, if it doesn't work back, promise me you will go back. I said, fair. And he said, you cannot touch your savings. Use this much money and don't touch your savings. I said, fair enough. So 2007, February, I came back to India, became a full-time trader. With the grace of God, I made my maximum money in the crash of 2008 because you always make more money when the market is going. On the day of the election result, when the market tanked down, you know, that is when you made money. I made very good money in Yes Bank now when it tanked down, you know. And there's always stocks going down. And this is where the biggest opportunity is because everybody is interested in this direction. I have a very simple logic. And my logic is built on a very base maths, is that I want, this is my portfolio, this is my, in my trading, I want to catch this direction, in my portfolio, I want to catch this direction. With the grace of God, it has worked very well for me and for thousands of my students. So 3 years passed, I did well, took all my balance sheets, ledgers to my father, showed it to him, serious man, he looked at it very closely for a long time, put his head up and said, "Mujhe bhi sikha de." So I knew that he has agreed that, and after that I never looked back. I became a full-timer. Then I started live trading in front of others in 2009. Jeffrey said, start live trading in front of others. And that was a challenge because in India, nobody live trades in front of others. You will find a lot of people giving gyan. I said, when you will go out after this class, there will be 8 people standing there giving you gyan and telling how you can become crorepati in 2 days. Not possible. So I said, the only way, you know, people can see it seriously if I do live trading and show my profits and losses to them. And they can do it with me because one aspect of stock market, especially when you do intraday trading, is the psychological aspect. And it's a very, very, not known aspect of trading, that the psychological and emotional control is the key to intraday trading. And many of you intraday traders there who are sitting on a good profit, and you couldn't control yourself, and your profit turned into a good loss. It is never a good loss, it's always a bad loss. Okay, so this is what happened. And this is what I started doing from 2009 onwards. That worked out very well for me and others. It is a win-win situation. Then in 2010, international company came to India. Somebody recommended my name. I had never worked with any international trader till that time. And I said I would take this opportunity. So I took a consultancy of almost 1.5 years with them. I was traveling all over India talking about the stock market. The more I talked to people, the more I realized that a lot of people lose money and they don't even know whom to tell because the losses are so big. So I was with them from October 2010 till August 2012. In 2012, I said thank you to this group. This is from Bollinger, inventor of Bollinger Bands. And I started working on a mentorship model of our. And with this mentorship model, I spent 6 months creating it. And this was my first batch of 35 students. In December 2012, after that, more than 100 batches are passed out. There are more than 5,000 students now. Classes happen in various cities. I traveled to about 7 to 8 cities in a year. This one is not only my passion, this one is in a way my way to give back, where I know the need is huge. There's so many people trying on their own, and you cannot learn stock market theoretically. Somebody has to do it in front of you. You have to do it with him. Hand holding has to be there, and it cannot be a few hours, it has to be a few months before you can become skilled enough to do it on your own. This is what I do. And a certain part of everything that I earn also goes in a small charity I have, where we teach academically brilliant kids age 16 to 21 who can never afford to learn financial markets on their own. But you are the well-off of the society. It is your responsibility first to become successful yourself and then to help others become successful. In fact, the first thing I always say is teach it to your family. Have your family involved into it. Don't have it in the carpet. My portfolio that I built, I have a WhatsApp group, me, myself, my wife and our 2 boys. Every month I post my portfolio on that WhatsApp group. First of every month, Dad will post his portfolio, so that they can also get the confidence that money can be made. My 16-year-old just passed, the quantity exam, and at 16, he is now the youngest option strategy trader in India. My older one is being trained till the class. My wife knows stock market. Almost all my friends and relatives I have taught it. So don't first learn it yourself, and don't start teaching from day 2. First do it successfully yourself for at least 2 years. 2 years, put your head down, learn and make money. Once you become confident that you can do it, please spread it around, and that is the best way others can also learn. Only 3 to 4% of Indians directly invest in the stock market with their own skill. Everybody else is dependent on somebody. So learn, and so you have to learn how to manage your own portfolio. This is the key skill. So my classes start with portfolio building. Then learn to make money with intraday trading, trade leverage assets and make money with it. This is what you have to learn. And anybody can learn. Stock market is not for a chosen few. Male, female, young, old, everybody can learn. But you have to commit yourself. You have to commit yourself. You have to pay money, you have to commit your time, work hard, and then the money is yours. This is the skill set required. So, no photographs, please. Thank you very much. Okay. So what is the skill set required? Stock selection with fundamental analysis. You have to be very proficient in analyzing companies. The quantitative aspect of it and the qualitative aspect. Quantitative and the qualitative aspect. Then chart reading with technical analysis. Fundamental analysis tell you what to buy. This will tell you when to buy. Then stock filtering. I just gave you an example of stock filtering, where mathematically we could filter stocks and find out these were bullish, these were. Similarly, in the classes I'll be teaching you fundamental filtering and technical filtering, so that you can find out of the 8,000 stocks, which are the 50 which are suitable for portfolio building. Out of those 50, which one are in the right place now to buy them technically. So these are the two filterings you'll have to learn. Risk management methods, mastery of online platforms. In the classes I also teach automated trading. What is automated trading? Where you can put your trades in the night and go to your office. And you don't have to look at your trade for the whole day. I've seen so many people who have the notion that to do intraday trading, you have to sit near the market for the whole day. That is not true. In fact, I've seen people who are addicted to the market. They sit in front of it for the whole day watching candles like this. As if by there watching the candle will become bigger. No. You will lose the most money by watching the market. Your TV has to be closed. No TV, no newspaper, no tapes, no experts. Throw them in the dustbin. To build your portfolio, it is between you and your balance sheet. And to do intraday and swing trading, it is between you and your technical. No third person is involved. It is not required. Absolutely not required. So when you are coming into the arena of trading, the best way to do intraday trading, normally what we do in the morning is, we all meet up at 9:15, 9 o'clock the class starts, 9:15 the market starts. We analyze our trades. I bring in my trades, my traders bring in their trades in my online trading room, and we decide this one looks to be the best possibility trade. By about 10 o'clock we have executed our trades, we discuss it, talk about the market, and normally after 10 o'clock my traders start leaving. After that they focus on their jobs or businesses or what they were doing. When do they come back near the market? After that, 3 o'clock in the evening, to see what happened to their trades. आप मुझे सीधा बता दो, मार्केट के सामने बैठ के हम कर क्या लेंगे? If your levels are clear to you, this is the place to buy, this is the place to put a stop loss, and this is the place to get out. Why do we have to sit near the market? It will just make me more emotional. Hasn't it happened to you, especially those who had losses? There was a day when you had some profit and you were in a hurry to book the profit because you had had losses before. And then you realize if you had not booked that profit, by evening you would have been a big profit. Please remember, most of your money you will make when you are not near the market. You will make very less money by being near the market. You will make most of your money by being out of the market and your trade is going on. And that is automated trading I teach, both intraday and high probability trading strategies are a must. Different tools are required. In my classes I will be teaching you about 50 strategies. A mix and match of stocks, options, commodity, forex, trending markets, non-trending markets, volatile markets, sideways market. Different tools are there for different markets that you have to learn. Need to have a proper trading plan aligned to your personality. When the class starts, I have a batch starting in Kolkata next to next Saturday, 7, 8, 9, 3 days. I have a batch starting in Kolkata. From these people sitting here, 15 people I can take, not more than that. I have 15 seats left. So here, so this is, money management And a trading plan is there. The moment you will come into the class, the first homework you will get is a psychological trading test. To find out what is your mental setup and how you will enter into the trading and the investing. Then rational decision making. Emotions are your biggest enemy here. You will make money from the emotions of others. Money management and trade management, a very overlooked concept, but it is absolutely of. It is in fact the turnover of, what is the beauty of intraday trading? You can do a lot of turnovers on the same capital. And it gives you a leverage. That's what makes it very attractive. And managing your emotions and your subconscious mind. These are the various batches that have passed out. Some of the photographs that I have put in here. These are from various cities. The typical batch size is around 30 to 35. I don't take more than that. I have 2 sessions now in the afternoon. In this class I can give maximum 15 seats, so there are 15 seats reserved for the batch that will come in the afternoon. All kind of people come, young, old. Okay, let's see how the session runs. It is a mentorship program consisting of live trading. The key is live trading. Key is the live trading. It is 6 months of mentorship and a lifetime of support. The class starts with 3 days of classroom training. It will be in this hotel, in the same place. Would be 3 days of classroom training, Saturday, Sunday and Monday. Saturday for the full day, I will teach you fundamental analysis, so that you know which one to buy. And I start by picking one stock from each participant's portfolio, what is actually having. And in the last 10 years since I'm conducting these, almost 90% of the stocks are stricken off, because they are either blue chips or randomly picked up stuff. And then for the whole day I'll be teaching you, how scientific portfolio building can be done. How you can get out of the grip of the mutual fund guy who are already ripping you off, and take the portfolio building in your own hand, so you get growth also, valuation also, and you can make that 20% a year. On day 2, we will do technical analysis and risk management. This is what we will be learning on day 2 in detail. And on day 3, for the whole day, I will live trade in front of you. When the market is open, I'll take 10 lakh rupees of mine. And on this day, you will not trade with me, you will just watch me. I'll do live trading in front of you right from 9:15 to 3:30, applying all those concepts that I taught you on Saturday and Sunday. And the risk management methods that I use in my real trading, I'll be doing. So first 3 days are finished. It is from 9 in the morning till 4 in the evening. Saturday, Sunday, Monday, 9 to 4. Monday you will have to come a half an hour earlier, so that we can see the pre-market, how it is. Once these 3 days are finished, then you will get a recording of this session. Because in 3 days you might not have understood something, some concepts are not clear. You will get a recording of this session, either this one or the previous one, whichever is, I feel, is best for you. And then 2 weeks you will have to listen to the recording again, get your doubts cleared. Each one of you will be assigned a relationship manager. And the key to my mentoring is I'm available most of the time. Monday to Friday, 4 to 6 in the evening is the time I reserve for my students. Anybody with appointment can give me a call and talk to me. But I have a fundamental analyst and a technical analyst who can answer your regular queries, for which you don't have to call me. But if there is something on which you need to talk to me, you can give me a call. So, in a month, you should be ready for live trade. 3 days of portfolio building, then your broker is your choice. You can choose whatever broker you want, that is your choice. But you will, be having a technical analyst software. By any chance, if you're not able to do that, my team can help you. But my focus is to get you ready for live trading. So 1 month is for getting you for live trading. The course is on 7th, 8th and 9th. Then there are, once your 1 month is finished, then your live trading will start. Then your live trading will start with me, which will be on 1st and 3rd Wednesday of the. Attending one is compulsory, one is optional. But if you can attend both, that would be fine. On this one, recordings are given of every session. For every session, recordings will be given in case you miss it. Even if you attend it, you will still get a recording. 1st and 3rd Wednesday, 9 to 4. So you will get in 5 months, 5 live trading sessions with me, 60 hours of live trading with me. And here you will not watch, you will trade with me. It will be totally online. First 3 days are physical. Physically you have to come to me only for 3 days. After that everything is online. So you will, and I will guide you there. These are the stocks we will be taking. This is how we are entering. This is how. And in the class you will have to take minimum 1 trade, even if it is a 5 rupee trade, so that you can have the real execution skill coming to you. And with experience, I have found more than 5,000 students now that it takes about 3 months for a fresher to pick up, and it takes about a month for a guy who already knows something to pick up. So after about 2 months, you can start your intraday trading. Your portfolio building will start from day 3. When I am doing live trading that day, I also pick up some stocks for the portfolio and you can buy them if they pass the criteria.
How much you attend? People are trading?
Free mein nahi, there's no. Listen. So here, now, this is 5 months you will be. Then every 2nd and 4th Tuesday would be a live learning session. First 1 month, you are ready. Then live trading, then live learning session. It is from 9 to 11 in the night with recordings, where I pick up a topic. Let's say I pick up Bollinger Band. What is the theory behind Bollinger Band? How do you apply them? And how we have recently applied. Another opportunities we get in the night, 9 to 11, is the commodity market that is trading in gold, trading in silver, trading in crude oil, and that's another thing that we will be learning. And then every Friday I will be sending you an additional session which will revise most of the important concepts. So this is the 6 months of mentoring program that you will have to pass, and most of you will become good traders and investors if you work hard. If you work hard. 50% hard work is mine, 50% is yours. I'll do my 50% very honestly. You do your 50% very honestly. Nobody can stop you from making 2% a month on your portfolio and 10% a month on your intraday trading. You will build your long-term. There's also a mentoring session that happens every Thursday, and this will be for life. Once you are my student, once you have done the course and the mentoring program, you will keep on getting this session for life. Every Thursday in the morning, 12 o'clock, where I analyze the market and answer your queries. And you can also have a talk with me. You can build your portfolio.